In this video, I'm going to perform an analysis on the pound dollar 15-minute time frame right before the open of the London session. From the highs and lows 0 to 3, we can see that the market created higher highs and higher lows. In the simplest description, this is an uptrend, meaning that buyers were stronger than sellers and consequently were able to create higher highs and higher lows. Also, we can classify this as the major flow of the market, and I'll let you know further in the analysis why I've said this. At this point, we already have the three alternating axes to draw a standard pitchfork to. Now you can see that the pitchfork was steep, so I had to modify it by using the midpoint of the axis, the midpoint of the movement between 0 and 1 as the a-axis of the new pitchfork. From the number 3, we can see that there is a minor flow that began to the downside. I say this is a minor because if you compare the magnitude of the movement from 0 to 3 and 3 to 4, it becomes a pretty obvious conclusion based on the sizes. Now notice how in tune the pitchfork, modified pitchfork 2 that I drew was in tune with the market and was able to catch market edges and exhaustion points. From point 5, we have new details in the chart. Sellers begin to aggressively take the market to the downside and close below the lows 4.1 and 4, rendering the high number 5 as confirmed market structure and also putting in place the notion of a downtrend. Since we're talking about a downtrend, we can draw a pitchfork 2, the blue pitchfork 2 that you see by using the axis 3, 4 and 5, and we can see that price moved down and retested the midpoint line of the new pitchfork that we drew. Moving to the low 6, we can see that price drifted out of the black pitchfork and went into the range of the pitchfork again. In this case, we can draw a width pitchfork by extending the c-axis of the first pitchfork to the breakout low so that we can catch the new frequency of the market. And you can see that this was right before the London Open, and price took off in our supply demand zone also with the midpoint line, and you can see how strong that movement was. From here was a way to catch this huge movement with a logical stop loss below a confirmed market structure here, and it would have been an easy 21 pips and 7 pips of risk, a 1 to 3 risk reward ratio. Thank you.